Welcome back to the Retirement Planning Made Easy.com show. I am your host, as always, Chris Hammond. And today I want to talk about your deadlines for IRA contributions for 2023. If you're watching this on YouTube, you actually see the title says Get a Jump on Your IRA Contributions for 2023. Well, I wouldn't say it's necessarily getting a jump on it because here we are in February of 24 and your deadline is approaching. But I guess I mean like get a jump on it. You don't have to wait until the actual deadline to do this. So just because we're in the year 2024 doesn't mean that you can't make contributions that counted for the year 2023 in your IRA accounts. And since that deadline is fast approaching, it will be here soon. I wanted to take time to make sure that you had this information so you can act on it if it's in kind of your own situation, what you're facing, if it's in your best interest to do that. So let's talk about a few important IRA facts. First one is the deadline for your 2023 contributions is April 15th of 2024. All right. So you have until the tax filing deadline to make a contribution for the prior year. Now, when you do your taxes, let's say you do your taxes in late February and you tell your accountant to put down that you're making a contribution into your traditional IRA, and they're going to record that onto your tax return, and it's going to help save you some taxes for your 2023 taxes. You don't necessarily have to have your money already in the IRA when you tell them that, but you have to have it in there before that deadline of April 15th. You have to have it in there. And if you miss that deadline and you don't put that IRA contribution in for 2023 by that deadline, and let's say you had told your accountant back in late February and they put that on your tax return, you're going to need to amend that tax return and accurately reflect that you shouldn't take that tax deduction. So your deadline to get it in there is April 15th. But even if you get your taxes done before that, you can tell your accountant what you're going to do, but you better do it because if you don't, you're going to have to alter things and change things up, amend your return to make sure that you're accurately reflecting what happened to the IRS so that they know that you're paying your legally obligated tax on that. Now, if you're under 50, the amount that you can contribute is $6,500. And if you're over 50, they give you a $1,000 catch up on that. So if you're over 50, you may want to, if it makes sense on your cash flow situation, you might want to do a catch up contribution as well, just to put a few more extra dollars in there. These deadlines and amounts, they apply to Roth IRAs too. Now, when I say the amounts apply to Roth, it doesn't mean you can put 6,500 in your traditional and 6,500 in your Roth. It can't add up beyond 6,500. So if you put 3,000 in your Roth, that means you've only got 3,500 left to put into your traditional IRA for somebody that's under the age of 50. The deadline also applies. Now, Roth IRAs, that's not really something that you are getting a tax deduction on your current return. So it's not going to impact your return that way. Like you're going to put in here a IRA contribution to reduce your taxable income for your 2023 tax return. But the deadline still applies. And if you miss that deadline, you can't make it up. So if you don't get that money into your Roth IRA by April 15th of 2024 to count for and say that this counts for my 2023 contribution, you miss it. That's it. So you can't wait and then on April 16th say, oh, I'll do it now. And then I'll also do my 24 contribution and all that. You can't make up that 2023 one once the deadline passes. And that's why it's so important to make sure you hit those deadlines and meet them if you are making contributions to these accounts. Now, let's do a quick health savings account detour on that. Health savings account for people with high deductible health plans. They can put money into these. They can take a tax deductible, write-off for making that contribution. The money grows tax-free as long as you spend it on qualified medical expenses. So really powerful accounts that you can use. The deadline for those is also April 15th. The limits that you can put into that for an individual is 3,850, and for a family it's 7,750. So keep those numbers in mind. And for this one, you have a catch-up provision if you're over age 55, not 50. All right. And then you can add an additional $1,000 to that as well. Now, let's just talk about some things to consider. Think seriously about your tax savings today versus tax savings tomorrow. What I'm specifically talking about is, does it make sense given your tax situation to do a traditional IRA contribution or a Roth IRA contribution? Traditional IRA contribution will give you that tax savings today because you get to reduce your taxable income, which should reduce your income tax. Is that more important, or is it more important to go ahead and pay that tax now, put the money into a Roth IRA, and then as long as you follow the rules of Roth, it's all tax-free in the future? Now, think seriously about that with where you fall on the marginal income tax bracket. So that's something you want to know where you fall on that so that you know, is it better? Because tax rates right now historically are lower than they have usually been. Um, and so they're probably going to go up possibly in the future. Now, that's my prediction. But you may be in a lower tax bracket when you retire, if you play things right. So you have to think seriously, does it make sense to save that tax today or put it into a Roth IRA, pay the tax now, and have tax-free growth going forward? That's something to consider for your own situation. Before you file your 2023 return, ask your accountant and tell him, what marginal tax bracket am I in? That way you can know if you do a traditional IRA contribution, you can know how much it's actually saving you dollar for dollar. If you're in the 22% tax bracket and you do a $6,500 contribution and you are reducing your tax expense for this current year by 22% of 6,500. All right. I can't do that math in my head just like that, but pull out a calculator and you can quickly figure out what that is. But you need to know what your marginal tax bracket that you're in, and your accountant can tell you that when you're filing your return. Now, get help if you need help on this. Now, what an accountant will do is they will record historically what has happened during the last year. They may tell you a little bit about, if you ask them what bracket you're in and all that. Their job oftentimes is not to think and help give you tax advice going forward into the future as to minimize your long-term taxes. A lot of times they'll give you advice on what you can do this year currently to minimize taxes. But a lot of times you want to keep your eye open to say, like, okay, if I can do something this year and it minimizes my taxes just a little bit, because maybe you're like in the 12% tax bracket, a really low one, and tax rates could go up in the future, and all that. Is it really worth getting that additional savings in that tax bracket right now, or is it better off just to put money in a Roth, pay the tax now, because in the future you may believe tax rates are going to go up, like a lot of people believe? Right? An accountant oftentimes is not going to help out. It's not their job really to help out with this forward-looking tax planning. So if you need help with that, you probably need to talk to a financial advisor that understands how taxes work, how the Internal Revenue Code works, things like that, and understands like the situation we're in right now as far as where tax rates stand. Understanding how certain tax rates are going to be changing at the end of 2025 with the expiration of the Tax Cuts and Jobs Act, things like that. So if a lot of this stuff seems overwhelming to you and you're having a hard time figuring out what the right decision is to make, then I want to encourage you, feel free to reach out and get help from a financial advisor that can help you with this kind of stuff. But anyway, you've got until April 15th to make some decisions on these contributions to IRA accounts. You'll notice I didn't mention anything about 401k accounts because that comes out of your paycheck, and your last paycheck was December. It was in December of 2023. So there's nothing more you can do about that. But your IRAs, you can still do some things on. Well, that's all I've got for you for today. If you are looking for any additional help on planning for your retirement, head on over to my site, retirementplanningmadeeasy.com. You can download a free copy of the essential step-by-step retirement guide, which really gives some good foundational knowledge and information that you can use and look at to help you prepare for your retirement and help apply some of that knowledge to your own unique situation. That's it for today. I'll see you guys next week on the next episode. Bye for now.